think where do I want to get out of that? I think around
All right.
7. If the VIX hits 17,
All
let me
right,
see where.
folks. It's Monday, 9:30 a.m. Markets are about to open, and we have Faisal, our equities analyst, on the call. It's March 2nd, and with the volatile week behind us, Faisal and I are going to discuss what we're looking forward for the week ahead, what sectors we're looking at, how the market we're looking at for recovery, and we'll discuss a couple other things related to the maybe coronavirus and how the VIX futures are looking as well. Okay. So with that being said, welcome Faisal.
Hey man, how are you doing?
Not too bad, not too bad. So I read your update. And by the way, folks, if you are not part of the Cryptosomniac Advantage membership, again, go to the cryptosomniac.com website, hit the products page. And if you are into trading stocks and equities, Faisal over here gives detailed updates at least 2 or 3 times a day, and he's available to answer questions pretty much all the time. He's a very hardworking guy. So, he's always willing to answer your questions if you have any. And this is our stock market channel. And if you have questions, you can ask them right here. All right. So Faisal, what do we have to look forward to for the week ahead?
Okay, so I know you've been probably been hearing all these headlines about the coronavirus and how terrible it is. And I just want people to get out of that negative zone for a second. The market has clearly gone down way too much. And I think Friday was the perfect day to kind of get into stocks because I think the average retail investor was more inclined to not hold stocks through the weekend as a result of the coronavirus potentially getting so much worse over the weekend. And then Monday, they're afraid the market's going to be down another, 500, 600 points before the open, and it's crushed. So, when I looked over what had happened Friday, I had saw a lot of buying, even though there was tremendous selling in the morning. I mean, huge selling in the morning. You kind of saw that fade away fast, and I wasn't able to get to see the exact statistics because I just couldn't watch it throughout the day. But as I saw on the close, you saw software, semiconductors, a lot of the big growth sectors that led the market before, you saw them really lead on Friday. And so that kind of told me, okay, people are more inclined to buy, especially semis because they have so much exposure to China. If people are starting to buy them, okay, this market is getting a little bit oversold. And that's not to take away from the fact that this virus could get worse and it could, affect supply chains and everything else even more so. You have to look at it in terms of balance. And the market has gone down way too much and it needs to recover a little bit. People need to start taking a little bit of chances at some point. Now, I'm not saying we're going to have a perfect V-shaped recovery as you kind of see that we had last year in May when we first dipped and then, recovered extremely fast. But, for the short-term traders or for the people who still have stocks that have not liquidated, I hope you guys did not get out because the fear was just extremely high. And I think your opportunity to get out will be sometime this week as the market, rallies and tries to balance itself out.
Definitely, definitely. And by the way, folks, we are not here to provide financial advice. This is simply our opinion. Faisal and I both, day trade our individual respective markets, and we are here to give you our opinion and our take on how we approach this market. Okay. So with that being said, uh, when we're looking at, you said the semiconductor ETF right here, definitely looks like a very strong recovery, right? Pretty much tail end at Friday, right? Now, when you look at recoveries, right, are you someone who starts looking at, say, the volume on the recoveries? Are you looking at key levels, maybe fib retracements? How does that work?
I definitely look at first and foremost leadership. The leadership has to be doing good. So Micron is a leader. Lam Research is a leader in the semi equipment space. You can see how much Micron, it was down to, all the way to 48 and went all the way back up to where is it now, 52. I
Yeah.
mean, that's almost a 10% swing in just one day. And I'm not necessarily looking at volume more so as volatility. I think the volatility showed that there was a lack of spread within the equity, and so when you started to see that type of volatility jump, that means okay, there's obviously some big buyer on one side or some big seller on one side that's moving this price extremely high, or multiple buyers or sellers. So it's more so about how volatile it is rather than the volume tally. But leadership performance, volatility, and I think ETF performance is also, like you said, like we were just looking at SOX. We can also look at the SMH. You want to see the ETFs kind of balance out at good levels, at good technical levels. Um, and so that's primarily what I'm looking at in regards to whether or not a recovery like we saw Friday is valid. And I think it is valid because we rarely see recoveries like that where a stock is down to 48 and manages to go back up to 52. I mean, that's an insanely big move, and I think it takes a lot of buying power and a lack of selling power to get that volatility.
Right, right. And I would probably figure that most people got flushed out from here down, and then market was probably just oversold, down here. So it's much easier to sort of aggressively push up the price from here, back up. And we
Yeah,
just see the open of the market, and you can see um, even SMH just opened, slightly gap up right here around 133.25. Let's see how the S&P 500 opened as well. Okay, so another gap up candle right there, right? So we're already at 29.83. So if this is your nice, hammer candle, for recovery, we should start seeing today at least get up towards, 3,000, 3,030 or so.
you could. I mean, I don't know how much at this point it can go up in a day. I think you can just kind of make the assumption that you will probably see a more positive week. Um, by the end of the week, I expect it to be hitting some type of resistance, or maybe by Thursday, it may hit that. Is that red line the 200 day or 400 day?
This is 200.
Okay, yeah, 200 day is a pretty strong technical resistance. You may expect it to kind of top out near there, or if it manages to break through there, it may top out at the next level. You know, it's not really sure because the virus is still here, and it seems like it's getting a little worse, and it's coming into the US and getting worse, so it could affect our companies directly. So I'm really not expecting, that strong recovery. So, it's hard to gauge it. I kind of do it by sentiment. Last week, the sentiment was so fearful that it was like towards the end of the week, from the start of the week to the end of the week, it was just going to be bad, bad, bad. And so, by the end of Friday, it was like, okay, the fear is kind of exhausting and everything needs to balance out. But to what level that balance is attained still has to be determined. And I think we may get some more clarity as the week goes on. That's why I said in my equities announcement, I said Monday, you should definitely see an uprise, and probably Tuesday, you will definitely see another good day. And I think by around the end of Tuesday, we can kind of gauge, okay, I'm seeing, some toppiness in some leadership stocks or some leadership sectors. And that could tell me, okay, the balance has been reached and the market is ready to either test the low or consolidate.
Right. Okay. Gotcha. And so you mentioned, specific days in the week. Is it like sort of like statistical data backing that? Typically on Wednesdays and Thursdays, these are like the best days, or down days, or Monday. I mean, is there something like that that you follow for your personal rule, or what?
Well, I think we talked about last week, the gap down on Monday. If it gaps down and, holds a nice technical support, you could expect the rest of the days to be, continuing the uptrend and continuing to go up. But I think with this drop that happened last week, it kind of changes the whole narrative. And I think people have to be very open to seeing things that doesn't normally happen. So I think, you know, it, it just all remains to be determined at this point. This is Monday. It's the first day after, you know, a historic sell-off. So I don't know if I would go with statistical analysis at this point. I think you just kind of have to gauge how the market's doing during that time and play off those short-term technical resistance and ranges.
Got it. Got it. Yeah, that's definitely a great approach. I think you are right in that this is definitely one for the books. Does this kind of sell off in 1 week? My
Yeah.
God, I mean, 15%, 60% drop from the top. Um, you know, I don't know like what this means if we cannot recover. Say, for example, if we sort of struggle at the 200 moving average and then start putting in a lower low,
Hmm.
especially after the fact that last Friday, I think it was right near the market closing, Jerome Powell did say that they're going to try to do whatever it takes to get the stock market and economy back on track. And I think, did he imply or did he actually say that there were rate cuts?
I think he was implying that there were going to be rate cuts, but in my opinion, it's like rates are already, so low and they continue. I mean, can you check out TLT? How did rates open today? I think they were down this morning. Okay, okay, it looks like they're a little flat right now, but I mean, they're already extremely low. I have a hard time believing the Fed's counter to everything is like lower rates, because even if this virus persists, companies are not going to spend on growth initiatives, and so those lower rates don't really mean that much. It's not really it's not really the perfect solution for this scenario. So as rates continue to go lower, I don't know how much it comforts the market to say, and we're going to make them even more lower. um, I just want to see them stabilize and maybe start to go back up, and then we
Yeah,
can talk about a rate cut or something like that. But to have a rate cut even here is like, okay, there, like I've been saying in the announcements, there could be something in the economy um, that just maybe the bond market is seeing, or something like that something is off beyond this coronavirus. Because I mean, you would think the rates would not go down this much, considering they're already kind of pricing in the Fed to come in and save the market in general. I mean, I think he's been talking about coming in and supporting the market through the coronavirus since a little bit of the beginning. So I think he's still, he hasn't said that he's going to do it, but he's been implying it for a while.
yeah, definitely. And I think we had this conversation last year around June or July when I told you that I pulled out a majority of my money from the stock market. And again, I'm not someone who is like trying to predict the future, but for me, it was kind of a little bit obvious that not that there were structural signs that were showing weakness in the stock market, but rather that having interest rate cuts at the top of a 10-year bull market to be able to flush up prices even more, that just doesn't seem healthy. Now it's great if the stock market goes higher, but in the longer term, the pain will be caused on the other side as well if you have such extreme overextensions to the upside, right? Because just like the market goes one way, I mean, it could definitely swing the other way too.
Oh,
And so I feel
oh,
like
of course,
I
yes.
feel like we're now maybe starting to see the ripple effects of these interest rate cuts of trying to figure out, okay, maybe there are deeper structural issues in the economy, and these rate cuts are literally the only thing that are propelling the markets forward. I mean, again, this is kind of just speculation for now because we need to see, like you said, how the market recovers. If it's just going to go like this and then go down, then we're kind of effed. But if
Hmm.
we're going to come back around, test this key area of support, and then create a higher high over the next coming weeks, then hey, and like I guess all is well, and we can just keep making money.
Yeah, I mean, if you start to see rates come down and then the market starts to go back up, I think, or I'm sorry, rates start to go back up and the market starts to rally a bit, then I guess you could say, okay, maybe it was just short-term fear that sunk rates to how low they are. But on Friday, after seeing a lot of the growth sectors being bought and some of the transport sectors that really got hit the hardest over this coronavirus, to see rates still continue to go down, I think was, and to go down hard actually. I think that was the most it sold off during last week was Friday. That just really sent a signal to me like, okay, I'm okay to say I know what I don't know, and I'm trying to read the signs, and rates this low is something that is not okay. Even though for the past year and a half, 2 years, low rates have been, as long as rates are low, it seems like the market just continues to go up, wants to go up. At some point you have to say, okay, there may be a reason these rates are going low, and it's not just because it's tied to the global economy, which is what I was kind of under the presumption. You saw rates acting like this when we were in that trade war and it started to escalate, and the Fed came in and said, you know what, we're going to make sure the US is strong. We're going to cut rates if this trade war gets rough. And for it to be breaking down even more so, it's just I really have a feeling there's something else in there, but I don't know. I think I really need to see this week rates start to rise. That's probably the most important thing, more so than the stock market rising, because I think the market will naturally balance itself out. But rates are a little bit more, they're a little bit more intelligent in that the fact that they're not rising with the market, I think it's a key signal.
Right, right. And Faisal, can you explain to the general public what you mean by rates, and as per this chart, what you want to see that is a healthy sign in terms of that these rates coming down and the stock market going up? Can you explain that real quick?
Yeah, so when I say rates, I'm talking about the treasury rates in general. It could be the 10-year treasury rate, the U.S. treasury rates, and so those are the interest rates that that pretty much control a lot of the monetary system within the U.S. And when we're looking at something like TLT, which is an ETF that reflects interest rates, to see it go up, that means interest rates are going down, because as interest rates go down, this is a bond ETF, and so bonds usually go up as interest rates go down. um to see the reflection of that, you usually like to see rates kind of stabilize and be in a type of range as the market continues to go up. Lately, you've been seeing rates, shoot, shoot downwards and kind of go into a downward spiral, and then the market continues to go up because the narrative is, as rates are lower, companies are able to borrow more from the bank because their interest rates on their loans are lower, and that in turn stimulates the economy. But it also could mean that the reason the rates are low is because the economy is not doing so well, and that's why the Fed is either cutting rates to make it easier for companies to acquire loans and grow.
Yeah, that is, yeah. I mean, what you were talking about, this whole rate cycle since last year earlier, from the whole China export war that was going on, or with the U.S. I think that was probably the one time where I said, okay, maybe at this particular point that I think it's okay to cut the rates. But it seems like this has kind of just become the norm for every little thing. It seems like we're just cutting the rates. And like you said, it just doesn't seem that healthy. Maybe there are potentially some structural issues in the economy that we just don't know of yet. And we might start seeing the ripple effects maybe come into the next few weeks, few months.
Yeah, and another thing I like to do, I don't really pair interest rates with the S&P in general. I usually like to look at interest rates compared to the small cap index. So if you could type in IWM, small caps have a lot more exposure to loans and are a lot more at risk to default if the economy collapses. So as interest rates go down, usually you would see small caps start to outperform a little bit more, as it's easier for them to grow. They're more dependent on loan growth, or I'm sorry, yeah, growth associated with loans. So as interest rates go down, you really like to see this sector stabilize. but so far they've been really the most disastrous index compared to the S&P, the Dow, and everything. And that it could be because they have more volatile stocks, as because they're smaller cap, they're a lot more, they're a lot more, what's the word I'm looking for? They just have a lot more volatility impacted in them. But,
Right.
you know, the general theme is if rates are low, these small companies should be doing a lot better. They're under less pressure. So when you start to see them both kind of collapse at the same time, it makes you think, okay, if the small businesses are not doing good, yet the interest rates are extremely low and they have the avenues to grow, um, why are they doing so bad? Is there another reason besides the virus? Because the virus hasn't even hit here yet to the point where I'm like, I don't want to go outside. I don't want to shop or do anything like that. I'm not feeling like that here in the US. But to see the small business index kind of collapse is definitely perking my ears.
Right, definitely. And it's interesting you say that. I mean, for now, the futures contracts don't seem to have reflected anything like that, but this is obviously from last week. Um,
Mhm.
for the most part, the E-mini, Russell 1000 futures are still, net long over here, as you can see. Leverage
Yeah.
money is net long. Other reportables are net long. Asset managers are net long. But if this week, say we start to see that shift too when the new COT report comes out, um, this is definitely gonna start, bringing my attention to the radar of, wait a second, now I need to maybe start backing off and thinking that, as you said, if IWM is struggling, if the small companies are struggling, and we're now seeing rates being cut, and even the S&P 500 is struggling to sort of break key resistance levels, like you said, it might be time to consider getting out, you know?
Yeah, and I think exactly what you said before, the Fed, it seems like their only option is just to cut rates, even though they say they have many tools. It's like the only thing they want to do is cut rates. And so even with the Fed saying, we're going to cut rates even more if this ends up affecting, the US homeland, it's like you want to see the IWM hold that key support level, but man, if I start to see it break, oh my gosh, that will be extremely negative for the market. I think there's a chance the market could go down to the low that we saw in 28 at the end of 2018.
Right.
You know, that's how important I'm valuing the small caps at this point, purely because rates are so low, and the Fed continues to say, "Hey, we will cover you guys even with lower rates if things get worse." So everyone who's trading the market should definitely keep an eye on the small cap index more so than just as much as the Nasdaq or the S&P 500.
Yeah, definitely. Now, this morning we were talking about the futures a little bit. Tell us what you saw pre-market and now, as market opened in the futures.
Yeah, I think this morning, I do the only play that I have right now is the VIX, and I'm shorting the VIX because I said, if the market ends up rallying, which is kind of what I saw Friday, um, you know, I think the VIX naturally should come down. And that was the most general call I could make, at least for myself. I wasn't ready to invest into any equities or anything like that because you just don't know what's going to outperform and what's not. Uh, so, you know, I, I think this morning we kind of saw last night we saw the market, you know, down, I think 300 points. And then this morning it was down, I think 100 points. And then, you know, look at it now. I think 10, 15 minutes before the open, it started to just rally so hard. I was like, okay, that makes sense. But, it's just an extremely volatile time. And I think people who like there's a lot of conflicting signs. Like I was really expecting this morning, early morning, to just be completely high. Like I thought the market would open up, 200 points, 300 points, whatever. And so when I woke up this morning and saw it down 300, I was like, that's kind of a shock. I was not expecting that at all. Um, but you can just see how fast things change. I think me and Amal were just talking a little bit before the call, and for maybe like 20 minutes, and at the beginning of the 20 minutes, the market was down 100 points. And by the end of the 20 minutes, it was it was up like 200 points. So I don't really know, how the futures can move that fast, but they do right now.
Yeah, I think it's that whipsawing in the market that also kind of scares me a little bit
Hmm.
because it really puts a lot of traders and asset managers on edge because typically, I mean, the best tradable markets, in my opinion, are the ones that are nicely trending. You may see some chop here and there and some consolidation, but when you see some big like whipsaw like this that we saw last week, this is usually at least a sign, not that it's the end of times or anything. It's just that holy crap, like this is some abnormal stuff that's going on. Selling
Yeah.
off 15% a week. If it was like a 7% pullback, you say okay. And we even discussed that last week. But a 15% drop, and now you want to see strong recovery into the week. This week is kind of it. Like the stock market really needs to show us that it has got something, some cards up its sleeve, or else we really need to start thinking about like, oh my God, maybe, there are some structural issues in the economy.
For sure. And I think, the structural issues could be people discounting the coronavirus to an extent that I don't agree with. Like, I think the virus will be more short term than long term. I mean, for the market to go down 15% in a month, or I'm sorry, in a week, like that's implying that the virus, like, this is going to be a huge, huge problem for a good amount of time. And I just think this week it's really got to show. The small caps have to show improvement the most. Chinese related stocks, even Chinese related consumer stocks, the Chinese homegrown stocks like Alibaba have to show a lot of strength. You have to see not only volume, but the breaking of key support levels, whether it's the 200-day, or I'm sorry, resistance levels, whether it's the 200-day or the 400-day. You really have to see the stocks and the leadership stocks that are the most affected by this virus outperform the most and break through the key support levels the most. Oh yeah, see, look at that 400-day, perfect. Kind of just touched on there and then went right above it. Oh, that's nice. But yeah, it's a very important week for the market in so many sectors and levels. It's a lot to watch.
Yeah, definitely. So aside from shorting VIX, any other positions that you're considering into the week? Maybe watching IWM to see if it finds support. Anything else?
Definitely, I'm watching software. Software still is, I think for the most part, their growth avenues are still domestic. So as long as, the virus, I don't think the virus has really picked up that much here. I think we had 2 new cases here or 2 new deaths here, but I don't know how many the total number of infected is. But I think software is going to be kind of a safe haven play because their growth avenues are mostly domestic. So you really want to see them also start to outperform if money managers feel like the market has gotten too oversold, too balanced. Stocks like stock like I think COUP is probably one of my favorite software leaders. It usually kind of gives me a barometer of what the software sector is planning on doing. You can see it's held up actually very nicely during this correction. But I'm looking for that to not only do well, but it needs to break key uh, resistance levels, more importantly. And that would give me a signal that, okay, if they're really taking the software sector up, then this market could be fine. Now, that doesn't mean the market in general will rally, but you will still have, the market being secular, buying will still occur, money will still flow into the market. It just won't be into the sectors that have direct exposure to this China virus. And so that's how you have to play the market then, pure sectors that are mostly domestic based for their growth.
Good point. Good point. Awesome. Well, it looks like we have a lot of things to look forward to for today and the rest of the week. Again, folks, come join Cryptosomniac. Hit the products page right here, join the Advantage membership, and you can read all about the equities markets over here. in Faisal's daily updates, or you can chat with him or me in this US stock market channel. And also, we have some interesting new features coming in. Faisal, we were talking about futures and options. Could you explain what idea you had for another channel right here?
Yeah, so maybe we can include some educational videos on options. I think options are a great product, and they're a great product, to hedge or to, I don't know, if you're playing options right now because implied volatility is high, you may not make that much money. But then again, if you don't know what implied volatility is, that's another reason why we're making this channel. It's going to be kind of an educational, and not really making calls on the market, as far as what options to buy, but definitely you know the power of an option as far as a hedge, or just to get, like, if you're trying to get a certain return or some type of thing, just to explain how an option can help you find your solution. Maybe it's the right solution for how you want to trade or not. And then futures, I think, I'm going to start doing a little bit more on that. I'm not really too familiar with the broad context of futures, but I do know futures within the S&P, the VIX. And so we're going to be going over a little bit on that and how that can affect, how the market plays out throughout the day, because I definitely think there's some correlation to, the futures in the morning and how the market ends up playing throughout the day. And then the futures after the market, how that plays on for the next day.
Awesome. Well, that sounds like a really interesting idea, and I'm really excited to sort of deploy that in our Cryptosomnia community. So again, folks, go to cryptosomniac.com, hit the products page, join the Advantage membership, and you will see more updates from me and Faisal. And until then, see you guys next week. All right, take care. Cheers.
Take care.